you were able to call the rally of gold and silver as well, way before anyone talked about it, like was talking about it.
And I actually called the mortgage crash as well. I wasn't on social media. The word banks are selling them these packages that are going against the trend. Silver is going to be, this time next year, probably between $100 and $120 an ounce. And silver, there's a shortage because there's a natural shortage of silver because the demand for silver, the mining in 2024 was about 800 million ounces and the demand was 1.6 billion ounces.
Will definitely bring us to the U.S debt, which is nearly $38 trillion.
38 and a half.
38 and a half. Well, it's going up so fast because when I made this questionnaire, it was 37. So, yeah, it's going up pretty fast. And gold is at $7,000 maybe?
8,000.
8,000. Do you think America can pull it off, paying off this
Yeah.
debt?
Yeah, they're not
They
gonna,
can.
Yeah, they're not going to default.
For today's podcast, the guest doesn't need an introduction. For me personally, the king of the gold market. If you know anything about gold and silver, you might have just come across his page because his analysis, he spotted the gold market, the gold rally before it even started. So please let me welcome today Mr. Meir Velenski.
Nice to
How
meet
are you?
Great. Thanks,
Yeah.
Ron. Thanks for having me.
Yep, it is a pleasure. Yeah.
Great view,
So-
by the way.
Yeah, it is. It is.
Unbelievable.
First, let me talk about your experience in the world of finance. I somewhere read that you have 35 years of experience as an investment banker from
correct.
Wall Street and from London as well, maybe.
That's correct.
From London as well,
And Hong Kong.
and Hong Kong as well. See, that's something that I didn't know. That was not there on the internet. I tried to research about you.
We don't advertise it so much. That's all.
I mean, yeah, that's good, but for me personally, I couldn't find anything from your background and your experience. So why don't you tell me and the audience as well? How did you enter investment banking, and how did you create this whole channel? Driving markets and give these crazy analysis calls, spotted the gold market, and how did this whole thing happen? Where did it all
Okay.
start from?
All right. So first of all, I'm not a social media person. Just be absolutely clear. That's not my forte. That's not where I'm set up. I do have social media now to inform the public, but let's go a little bit into the background. The background is all finance, all banking. That's it. That is the background. There's no other background as such. And that started off working in the City of London, working with a huge Japanese bank, and then moving on to other banks, whether a German bank or an American bank and a French bank. I was head of trading of those departments on options and warrants and U.S. equities and fixed interest rate bonds. Didn't really get involved with the public, was very much dealing with bank to bank or broker to bank, etc. Then slowly start building up contacts with private clients, private wealth management. I've worked at companies on the private side as well, retail side, like City Index is one of the examples. There was a company called Worldspread that went bust, actually. So I've been involved in retail and involved in investment banking at capital markets. There was no need to go out there and advertise myself. There's no need to do all these LinkedIns and whatever else, because when it comes to getting a job there, it's very much done over a beer or a cup of coffee, whichever the case may be. They call you, say, hi, do you fancy meeting up at 10 o'clock on Monday morning or whatever? You go there and you get a job, etc., etc. So just to be clear regarding gold, silver, and financial markets, I didn't wake up one day and said, you know what? I've decided I'm going to be a Kardashian and do reality TV and make sure I grow my backside huge, and then tell everyone, hey, one of my nails, oh my God, it's crazy, I broke my nail. And this, I had a coffee and that milk was off. We're not into that. That's all crap. Excuse the language. That is just reality show just to get people to sit there and kill their brain cells. Okay.
Yeah.
So when I have watched reality shows with my family, then my gray matter, my brain cells commit suicide. You can feel them jumping off the brain and doing themselves in because that is dead. There's nothing there.
Yeah.
That's still not the reason why I go into social media.
Yeah.
As you asked earlier on, actually before the podcast started, very much, I was just driving one day in the car, as one does. Someone sent me a financial analysis on video, and I looked at it and I thought, oh my goodness, that is the biggest load of crap. I cannot believe the public is exposed to this trash.
Yeah.
So, as I said earlier on, out of frustration, I'm driving. I said, right, I pressed the video camera on my phone. I didn't know how to do, what to do, upload, any of that.
Yeah.
And I decided I'm going to post something to the public. Now, because it was unedited, there were no captions, there were no headings. I didn't even know what all these icons meant, links and one thing and another. It was very raw. It was just me talking. So it didn't get under the algorithm of Instagram or TikTok or YouTube because I didn't have the necessary knowledge what you have to do to get things going.
Yes.
But eventually, after a period of time, it kicked off. Now, my daughters were a little embarrassed about me. They said, Dad, get your hair done. I've got no hair. They said, Dad, that's why I wear a cap. They said, Dad, get your hair done, get your shirt done, wear a designer shirt. I said, I'm not interested in all that crap. Whatever. I'm just posting information. Either they like me, don't like me, who cares, etc. So I just wanted to give information over, whether you're handsome, ugly, not shaven, clean shaven, in the car, out there, it doesn't really matter. The idea was just to get the information out to the public as fast as possible based on my 35 years experience. So then they told me to do Instagram. I thought Instagram was for girls doing their lips.
Oh, okay. Okay.
With their bikinis,
Yeah.
I didn't understand it.
Yeah.
And then some of the videos became viral and things got completely crazy. So then it started from doing a video to answering questions. I was getting like 200-300 questions a day from people. What to do this? What to do that?
How many questions, sorry?
200 to 300.
200 to 300 questions a day.
Now I get like 600 a day.
600 a day.
Yeah,
So
and I answer all of them.
You answer all of them?
I go through, that's not even WhatsApp. On my WhatsApp, I get like 1,000 messages on my WhatsApp.
Okay.
And I answer everyone. And they're not long answers. So it's not like I'm giving the whole essay. I do yes, no, it's going to hit this level. So it's very much
Like pretty fast.
I burn through the messages as fast as possible.
Yeah.
So then, and the idea was just to give it as it is and be a little bit zany, wacky, do what I want. If I want to dance on Instagram, I dance. If I want to crack a stupid joke, whatever the case may be, and just give the audience as much information as possible for them to be successful. In other words, not charge them for it. They can do what they want. If they want to become a member, they can become a member. We have we have analysis, we have fundamentals, but I'm a fundamental trader.
Yeah.
So when I spot something in the market ahead of the other analysts that are paid huge amounts of money on, by the way, these analysts are paid $500,000-$600,000 or pounds a year for analysis, these quantum analysis, statistics analysis, etc. They're paid huge amounts of money, but they are on data fed. I don't work on data. I look at data and then I look overall what's likely to happen as a result of the data and the economic and political setup for that particular move.
You just don't go with the data itself. You look at the, the other side, the backside of it, the possibility of it not happening or, something different happening.
Correct. So the data everyone looks at. Every analyst in Wall Street, in London, in Germany will look at data. Everyone looks at anyone who says they don't look at data is not in a good position. I look at data. However, I don't solely base my analysis on data. And I don't wait for the data in order to give an analysis. In other words, I'm already giving analysis before the data even hits based on what's happening in the street with businesses and companies and sales and overall atmosphere and the footfall in a shopping mall, for example, see what's going on there. You can identify very quickly what's happening and where likely growth is going to come in the economy, in the economic setup and the overall macroeconomics in the for the actual state itself or the country itself or global economics. Based on that, I make assessments and then say, right, this is what's going to happen going forward. Now, it's quite a statement, Ron, to make this is what's going to happen because most people say it could happen like this or could happen like that, and they sit on the fence. I don't sit on the fence. I just say, this is going to happen, get involved, this is the target.
Yeah.
So
your analysis, I've looked at your analysis, they're pretty straightforward. Like you don't be a diplomatic in your analysis. You don't go like, okay, if this doesn't happen, you just say it's going to happen.
That's correct. So I'm not, it's very black and white, which people have said you should not be so black and white because it damages reputation. I said, well, actually, I don't mind.
Yeah.
So I'm not out to maintain my reputation. I'm out to give the public information. If that means that my reputation is damaged as a result of getting it wrong, I hold in my hand and say, guys, I got it wrong. It's wrong. That's the way it goes. I'm not saying I'm 100% right. I'm saying 30% of the time, which is pretty low, I'm wrong. 70%, I'm right. That it's not an ego trip. It's not saying, I got it right. I got it. It's a matter of just giving the public as much information as possible. And by the way, the banks don't give it to you.
No.
Financial advisors don't give it to you. Insurance companies don't give it to you. Pension funds don't give it to you. Hedge funds don't give. Who's giving you the information? No one. The Daily Mail, Financial Times, they're not giving you information.
No.
They're giving you minimum information. And in the Financial Times, if you're educated in finance, you can understand the terminology. Otherwise, Joe Public has got no one to turn to.
Yep.
Apart from maybe some scammers on, the internet or something like
Telegram.
that. Yeah, 21-year-old TikTok Lambo guys who claim they're going to make you £100,000 a week by doing FX. That ain't going to happen. And anyone who sends their money to these people has to be mental.
Yeah.
And living a dream only comes through hard work.
Yeah.
So these guys were advertising all these types of whatever. Don't pay attention to them because it's not true.
They just run a pyramid scheme, I feel.
Yeah.
And they sell courses and everything else.
Yeah.
And that's how they make money, I feel.
Yeah. They sell private planes and they show a picture of the Maserati or the Lambo, etc. I don't show any of my assets at all. I don't need to. I'm not out to prove anything. You either like it or you don't like it. But the most important thing for me is to give information to the public.
Yeah.
Whether it look good, don't look good, that's irrelevant. That's not me. I'm not interested in that.
That's not area of your focus.
Now focus is to give over what's happening in financial markets, which I think is what people want to hear.
Yeah.
Okay. A little bit of color, a little bit of jokes, a little bit of zany. I get that to make it a bit more flavor. Otherwise, it's grey hat, grey suit, grey shirt, grey tie, grey personality. Yeah. It's not going to work. So there's got to be a bit of color, but generally give the information over.
Yeah, that is your main problem.
That is my focus. And people who want to join the group, they can join. We're not selling the group. We're not out there saying join. Yeah. You want to join? Great. You don't want to join? Great. We don't mind. Whatever's good for you.
Perfect. And just one thing that you just said right there, Daily Mail, Financial Times, all these, newspapers and everything, which
mainstream media.
Exactly. They provide you the minimal information. When I was 2 years back, one of my friends told me, if you want to really, look what's happening in the market, don't read Financial Times.
Absolutely.
Because everyone is reading it. Everyone is reading it. But also, if you're reading it, you're just getting the same information like anybody else.
Absolutely.
And then I started to go around. What would be would you suggest, Wall Street Journal or Bloomberg, all these kind of, media channels just to get information about finance, or would you not recommend those as well?
Right. So first of all, I read the Wall Street Journal, I read the FT, I have Bloomberg, Reuters, and I look at all financial information. There's nothing wrong with looking at that information. That information is for the mass public, and it's great. It fulfills a tool. Yahoo.com, Yahoo Finance, or any type of finance is all good. However, the information you're taking in needs to be filtered. And therefore, if there is a news piece somewhere, then do the research on that news piece. In other words, Financial Times journalists are covering the world. Wall Street journalists are covering the world. Reuters is covering the world. Bloomberg. Therefore, I'm dependent on those journalists bringing me information. However, I then take that information and I do further research on what's going on, that they've done a quick summary in mainstream media. So it's not bad. It's not bad at all. In fact, you can use it to your advantage, but it's understanding how to interpret the information, which can make you a leader. If you just take that as face value, remember that it's historical information. When they report in the newspapers, that's already yesterday's news. They're not giving you what's going to happen in 2 days' time. Like no politician would tell you what's going to happen in 2 days' time.
Yes.
But if you start looking at the fact that Trump is traveling over to China, that's just news. Hold on, what's happening to the relationship with that? What's likely to come as a result of that?
Yes.
Then you say, right, there's likely to be an agreement, likely to be trade deals, likely to be lower tariffs. We should be buying into 1, 2, 3. That type of thing.
Got it. we might be looking into Chinese stocks or maybe something like that.
Exactly.
Just giving out analysis with what's happening. So reading news is not wrong, but we need to do our part as well, which is research.
For example, there were elections in Japan. So I already said before the elections that Takaichi is going to win the election. Okay. So I already said that. Now, that was a wild guess, by the way, or wild assumption, because who said she's going to win the election? She might have lost the election. Everyone said, well, you got it wrong, which is fine. Just so happens I was right and won the election. I said, buy Japanese stocks, buy Japan's index. There's going to be huge stimulus as a result of a change in policy. Lo and behold, she won the election, which was a guess. Okay, I didn't know anything.
Okay.
And they just announced last week a 17 trillion yen stimulus package. Wow. So what does that mean? It means that the index is going to go up. Lo and behold, index went up to 52,000, and it's going to go higher. So for the podcast, anyone's listening, Japan is a place to invest. You definitely need to hedge your bets with the Japanese yen and make sure you've got an FX counter balance with there, because if the stocks go up and the yen goes down, then you make on the stocks and you're losing on the exchange rate. So you definitely need an FX hedge there. I won't go into details now what it is, but you need a FX hedge. But Japan is going to grow.
They ordered like 17 trillion yen injection. So this stimulus, it's like a cash injection in the economy,
Correct.
right?
Stimulus package. So they're going to be either printing money or selling bonds or generating through revenue. Probably going to be printing money.
Yeah.
Now, what they're looking to do in Japan is the same as what Trump's willing to do. So it's a new phase, a new proposal. We have to remember that in the US, there's never been a businessman in charge of the number one global economy. It's always been the politicians, and the politicians are full of, I won't say it for your podcast because I don't want to offend anyone, but politicians have got no idea how to run business.
Exactly.
Whether you like Trump, don't like Trump, that's a separate issue. I'm talking about just business, okay?
Yeah.
Japan, with a 17 trillion yen injection, they're looking to grow the economy. Now, at the moment, their GDP to loan ratio is 240%. In other words, the loan to what the GDP is well out of sync. What they need to do is they need to close that ratio through increasing GDP. And they'll increase through GDP through AI and through technology. They'll become a leader, and therefore they'll have rising GDP. The debt will stay the same, but the ratio will change from 240 to 180 to 160. As a result of that, you get a stronger yen. As a result of that, you're going to get rising stocks, rising yen, and it could be a great trade.
Like a good time for Japan.
Fantastic time for Japan.
Okay.
I'm very bullish on Japan.
Right now.
Yeah.
So my second question, when I say crazy analysis calls, when I called out your, social media, you were able to call the rally of gold and silver as well, way before anyone, even talked about it, like was talking about it. So I know there are things like, U.S. debt rising, countries moving away from, the U.S. dollar, people are investing in gold, central banks are buying a lot of gold. How are you able to spot this? How, what was the data sets, or what was that thinking that made you realize that, okay, gold is going to go up, central banks are going to buy and everything else?
Right. So the data that I have, everyone's got. There's nothing special about my data. Saying, has he got access to special data that no one knows about? Totally untrue. I've got the exact same information as you and as every man in the street. It's all a matter of how you analyze that information and then lead it on to further steps. So essentially what happened was, back in, it's a bit of history on this one, so it's a bit of a longer few minutes on this topic. It happened really back in 2008, 2009, and I actually called the mortgage crash as well.
Okay.
I wasn't on social media.
Yeah.
What happened was, like in August 2007, one of the banks came out, which was countrywide lending in the US, and they said that their default rate has increased. And I said to everyone, sell the market, the mortgage market's going to collapse. Because the minute the subprime debt had started to default, which was the driver in the US market, and Countrywide was a subprime lender, Then I called, I didn't know Michael Burry, and I know there's a Big Short, and he's famous, etc. I'm not looking to be famous. I'm just telling you what happened in the small infrastructure within my office. So I told the guys, this mortgage market is screwed. Then Deutsche Bank came in. We're going to Gold in a second. I'm just giving you an idea of what we look at.
Yeah, no worries.
Then Deutsche Bank came out with a subprime lender. I think it was called Black or Salt. I can't remember which one it was now. I think it was called Black. And they were lending money out, Deutsche Bank. Yeah. And I said, if Deutsche Bank is lending money in the subprime market, it's over. It's over. The market's over. This is before all the defaults. Okay.
Well, why Deutsche Bank giving money to subprime lenders? Right. What did that hit you like? Okay, now it's over.
Right.
Why like this?
Right. So Deutsche Bank is not a bank that lends money outside of Germany.
Okay.
They set up another subsidiary bank called Black. I think it was Black. Again, the viewers can check this out. I think it was called Black. And they were lending money at a higher interest rate to people that were subprime, defaults, counter court judgments, delinquency, didn't have a stable job, etc. So they were non-declared income mortgages. And I said in the office, I said, if Deutsche Bank is lending money using a subsidiary bank of theirs, which is set up, the market's over, which means the market's saturated and everyone just wants to get a part of this action. Yeah. Of course, everyone in the office said, you're crap, what are you talking about? It's not going to happen. I said, it's over. Now, that was in August 2007. It was well before the crash, okay? So they were lending money, and when I looked into it, on some cases, they were paying £15,000 to £18,000 to the broker who introduced the case. So I said, work it out mathematically. If they're paying out £18,000 plus other costs to set it up, means it's going to take them round about a year and a half to 3 years to get the money back just on the purchasing cost of getting that mortgage in. Yes. So all the facts were adding up to a mortgage market crash. Didn't happen. I sold the market. I was then essentially criticized, mimicked in the office, whereby the market kept going up, a bit like the Big Short. Yeah. And everyone said, you got it wrong, you see, you don't know what you're talking about, etc. That was just the mortgage market. Yeah. Then in July 2008, the price of oil went to $156 a barrel, and the market still moved up. I thought, what the hell's going on? Then only from September 2008, the market began to teeter. And then towards December 2008, January 2009, AIG declared they're practically going bankrupt. That's when the market crashed, etc. But I saw the signs already in place beforehand. Again, I'm not Michael Burry, I'm not a Big Short. Yeah. He already was selling the market 2002, 2003.
But this is, sorry, I'm cutting you off. You're talking about the mortgage market,
mortgage market, not about gold.
Not the stock market.
Not the stock market. So your question was, how do I identify market? So go and fast forward. I'll give you another example, which was in Corona, November 2019. Yeah. Then I got a phone call from one of my colleagues, said, have you seen what's going on in China, in Wuhan province? I said, no. So there's a big flu epidemic going on, then people are dying. I thought, okay, whatever, no big deal. It's not affecting me, it's in Wuhan. I didn't really think of it. And then in this December 2019, and then December 2019, South Korea lockdown. I said, South Korea lockdown? That's a major country. It's not it's not a third world country.
Yeah, it's not a joke.
I said, sell the market. I said, South Korea lockdown, it's going to spread. Okay, if it's gone to South Korea, it's gone everywhere. And that was already before. The markets are still going up. No one gives a crap. There's still flights all over the world. No one really takes into consideration. And I said, sell the market. It was a little bit early. The market went up. And I said, the markets are going to crash. This is before. Of course, got the usual criticism from my colleagues. You got it wrong. What are you talking about? You're exaggerating. Usually get that every day. It's not a big deal. They all tell me the same thing. You got it wrong. And again, it wasn't a matter of being right or wrong. It was a matter I said this is going to happen. And all of them said absolutely not. And then Italy locked down. I said, Italy locked down, but they're still traveling to Austria and Switzerland. Borders open. It's going to be a global pandemic here. There's no control. Planes from Iran were landing in England. Everyone was just flattered. This is over. We're finished. And then up and then completely collapsed. So that was another indication of how I read events. The other event, which was significant, I posted this on YouTube, and I was only doing YouTube at the time, was in December 2021, when I said inflation is going to go up and interest rates are going to go up. And that interest rates were zero, inflation was zero. Everyone said, what the hell are you talking about? Why would inflation and interest rates go up? When look at the economy, they can't afford to put them up. I said, there's inflation, there's been money printing from Corona.
Yeah.
I said, there's been huge amounts of money printing. That's going to feed through. People are locked down. Okay, you're going to have this pent-up demand, and you can't get a hold of Louis Vuitton. You know, people want Louis Vuitton, Rolex watches. Oh my God, I've got to have a Louis Vuitton. And there's all this furlough being paid out, and all this money, and what they call it, bounce back loans and bounce your check loans. I don't know, whatever, bounce loans. All these loans are being loaned out. There's huge amounts of money. Inflation. No, yes. Went into January 2021. I said, inflation is going to go up. We're going to have interest rates at 3.5% in the US by the end of the year. What are you talking about? Maybe 0.25% might go up. I said, okay, now that's quite a call. To go from 0 to 3.5% in 1 year. That takes some balls.
Yes.
So, that's a big call, that is. That's well out of what anyone's thinking. What are you talking about? Maybe 0.5% this year in 2021. 2022. So comes January 2022, and then Russia is lined up to invade Ukraine.
Yeah.
It's another. I said, no one puts 1 million soldiers on a border with artillery, with air force, with tanks, just to have a saber-rattling exercise to fight in Ukraine. They're going to attack Ukraine.
Yes.
And guess what? No, yes. You talk crap, they're going to withdraw, nothing's going to happen. So they're going to attack Ukraine. Wake up one morning, they've attacked Ukraine, and oil shot up to around about $127 a barrel. Everyone went crazy, etc. Then Janet Yellen said that inflation starts picking up. Biden blamed Putin, which is totally untrue. Putin has nothing to do with inflation. That was a pure political lie, and I want to, for the records, not support Putin. I just want things to be correct. So he lied, and Janet Yellen said inflation is transitory. I'm looking at this thinking, this is regarding gold. Inflation is transitory, and this is the U.S. Treasury. U.S. Treasury Secretary saying inflation is transitory. Said this is crap. So I began to post. Inflation is going to go up to 10%. Another big call. So
it went to 9.1.
That's right. It's only 1.2% or 0.9% or something.
But 9.1% saying
that's what they're saying.
It's pretty high for US having 9.1%.
So I said to them, it's not going to work. And interest rates are going to go up all the way to 3.5%. And again, everyone's fighting, pushing me back. And the bank says, don't post that because it's affecting their position, because they want to sell their stocks and shares to all of these unfortunate customers that believe that the banks, and I won't mention the banks, I don't want to be sued by them, but the banks, the word banks, are selling them these packages that are going against the trend, okay? Because they want to get their commissions, they want to get their funds under management. So Russia invaded Ukraine, inflation shot up. And that's when I said, right, at 2020, with all these trillions being printed, I said gold. I said gold and silver are going to fly. But I got it wrong because they didn't fly. I said, no, they're going to fly. They're going to fly. It's impossible that they're not going to fly because they're printing money and they're devaluing the dollar on a daily basis.
100%.
When Russia had its assets frozen by Biden, $300 billion of assets frozen by Biden, therefore they lost confidence in the reserve currency, which is the dollar. I said, gold's going to move. So the central banks were buying gold from 2008, but they accelerated their purchases from 2022 based on lack of confidence in the US. Based on lack of confidence, is your dollar safe, or can America just freeze your account, which they did with Russia? That means they've got to go to a non-decentralized asset like Bitcoin or gold or silver, where the banks don't control it. So I said to my clients, start buying gold. This is not on social media. This is before social media. I said, start buying gold, start buying gold. Then it began to move up. And then came in October 23, there was the Hamas-Israel war. I said, Iran's going to get involved.
First you said stop buying gold.
Start
Start buying gold.
Start, not
Okay.
stop. Start
Okay.
buying gold.
Yeah, I got confused there for 1 second.
No, start buying gold. Begin buying gold.
Yeah.
And they began to buy gold at 1253, 1553, 1643, different levels.
Yeah.
I said, it's going to go up. And they said, no, maximum is going to go to $2,000. I said, what are you talking about? That's nothing. It's going to go up dramatically. No. Yes. You know, everyone says maximum $2,000 is going to correct back down to 1,500. I said, it's not going to correct. I said, gold is going to go up and continue going up. And silver. Silver didn't move. Silver was 18, 20, 22, 21, 20, 18. Didn't move at all. So that was completely wrong. Got on silver.
Okay.
And just to make sure for the audience to know that I'm not just some sort of, wizard thing, get everything right. It's not true.
Yeah.
And so gold started to move up. And I started telling everyone, 2023, buy gold. Went to 2,000 all-time high, reached all-time high. I said, it's cheap. Buy gold. Buy gold, keep on buying gold because of fiscal stress, devaluation of the dollar, rising inflation, printing of money. Governments don't trust each other. Sovereign funds were buying it. Family offices were buying it. Brokers with clients who didn't declare who the clients were. China, huge buyer of gold.
Yes.
So I said, buy gold, keep on buying gold. It went to 2,000. No, it's too high. I said it's going to go to 2,600 by end of 2024. Went to 3,000. I said, keep on buying it. No, it's going to come back. It's going to crash. Keep on buying it. I said, it's going to go to 3.5. It's going to go to 4,000. Now I said, it's going to go to 5,000. It's going to continue rising. Silver, different dynamics. That only took off in the last 8 months. And once it broke above 27, I said, buy silver, get into the miners, get into the ETFs, get into the physical. It's going to continue rising. Went to 30, back to 32, back to 31. Heavy manipulated.
Yeah.
I said it's going to go silver. Heavily manipulated because it's a small market.
Yeah.
So there's not a lot of silver around. Market makers want to suppress the price because the industry needs it at a cheaper price. So it's more than gold. So it's heavily manipulated. That's why it's more volatile. But I said it's going to go to 40, it's going to go to 50. I'm saying now it's going to go to 60. Everyone says, no, it's going to come back. But my opinion is that it's going to go much higher. In fact, my target next year, just for everyone should know, silver is going to be, this time next year, probably between $100 and $120 an ounce.
Okay.
This time next year.
Pretty big target.
Yeah, it's a big target.
I mean, I personally... I don't know if I'll put this in the podcast, but I have my personal target is near $75, but I don't have a target of 100.
That's near term.
Yeah.
That's near term. That's going to be in the next 3 to 4 months. Yeah. I'm talking about a year's time. You're talking about $120. Yeah. And rising. Yeah, because there's no supply.
Yeah.
There's no supply.
I've heard a lot about this, that there is a very big shortage of gold, and like not a lot about gold, like not a lot shortage in gold market, but definitely in silver market.
Right. So gold, there is a shortage. Okay. There's a shortage. So for example, the LBMA in London, the London Bullion Markets Association, LBMA, they have got no gold.
Okay.
So they've got, for every 100 owners of 1 kilo, there is 1 kilo. So that 1 kilo is assigned to 100 owners. And recently they were paying leasing rates to China of 39% interest rate to lease the gold from China in order to get delivery. That's how shortage of gold is. So what gold is today...
39%.
39% a year. And that is cheap. Gold today is cheap. Okay?
Yeah.
So you might think at 4,100, 4,200 is expensive. It's expensive in relation to where it was 2 years ago, which is 50% less. It was 2,100 even, no, even lower. It was 1,900 2 years ago. So it's cheap today in relation to where it's going to be. So if I say gold's going to be 8,000 in 2 years' time, would it be a buyer? Would it be a seller? But to me, it's simple. Yeah. And silver, there's a shortage because there's a natural shortage of silver because the demand for silver, the mining in 2024 was about 800 million ounces and the demand was 1.6 billion ounces.
So there's automatically...
Just on that alone without any other fundamentals.
Yeah. Okay, perfect. My next question to you was, what do you think about the gold and silver market right now? I guess you've answered that already. I think
it's ready for a breakout. So everyone absolutely clear for this particular session. And I've said it on my members when we have Zoom calls every morning at 8 a.m. with the members of the group. I go over all the fundamentals, the analysis. We are looking at a breakout again. Now, each time, just so you know, the market goes up, comes down, stays at a certain level, doesn't move, and then breaks out against the next breakout. It's 4,500 plus, up to 5,000 on gold, silver, 55 to 60. But we're going for a breakout on gold and silver.
Definitely.
And copper, by the way.
And copper.
Copper.
Copper has been going up a lot in the last... Right, after the tariffs hit, the copper went up pretty well.
Yeah, so as copper, the reason why copper is going to go up is because copper is used heavily in infrastructure and AI.
Yes.
Now, because it's heavily used in infrastructure, with the money coming in, again, how do you see things looking ahead? So this is the overseas investment, which is committed at $20 trillion overseas investment into the US.
Yes.
That's going to build infrastructure. 17 trillion Japanese yen stimulus package is going to develop the infrastructure. China's going to develop more of the infrastructure. Therefore, copper is going to be sucked in. Their copper is going to go up.
Yeah, and copper is even used in EVs.
That's correct.
Yeah. And there's a huge consumption in China and India. Like they are, I guess, the biggest consumers.
India's huge.
Yeah.
India's a huge potential user of all of that.
Yeah.
And so copper's going to go up.
Definitely. Okay, perfect. So my next question is something about, the recession, the upcoming recession. So talking about these pointers will definitely bring us to the U.S. debt, which is nearly $38 trillion.
38.5.
38.5. Well, it's going up so fast because when I made this question, it was 37. So, yeah, it's going up pretty fast.
And that was 2 days ago. No,
it wasn't 2 days ago, but it was a few weeks ago, and it was at 37. So the interest rate scenario, the Fed and Trump, first let's start with the basic. The US debt is at $38 trillion. Again, a few weeks back, it was at 37. They're running a huge fiscal deficit. The debt is increasing like anything. Many argue that, the US can never default because it can print its own currency. But if Washington keeps issuing this debt to fund their spending each year, how close are we to testing that theory in real life where they're just printing money like anything? Do you believe it's already gonna start in next?
Right. So they're going to continue printing. Yeah. The debt's going to continue rising. The dollar's going to continue falling. But what's the end game? What's going to happen when they get to a number that is unsustainable? So what Trump has done, which is quite interesting with the Genius Act, he's essentially allowed private companies like Tether to introduce a stable coin backed by the dollar. Backed by the dollar means backed by government debt. Yeah. So he's created a private enterprise of buyers of government bonds. Yeah. And those buyers of government bonds will be private companies controlling the U.S. economy, which is quite an interesting setup. In addition to that, he's buying gold and he's also buying Bitcoin. So there is a potential balance that's going to go as follows. This is the first president that is using assets or buying assets on behalf of the administration, behalf of the US. No other president has bought assets. What they've done is printed money. They've never actually invested. So as far as Trump's concerned, the Trump administration is investing in assets of gold and Bitcoin, which could rise in value, and we'll talk about revaluation shortly, would rise in value and then could offset part of the debt that's already been established or growing. As a result of that, there'll be more confidence in buying US treasuries. As a result of that, there'll be more confidence in the dollar, but that's a long way off. Okay, it's not anywhere near next year or the year after. The other thing he would do is he could revalue the US holding of gold, which is 630 million ounces at the moment. Sorry, 287 million ounces at the moment, based on a value, I think, of $42.
1976, I guess.
That's right. It's $42.30 or something. If he was to revalue that at today's price, that would produce $1 trillion alone just of available cash. However, if he was to revalue it to $10,000 an ounce, then that would push the debt to loan to ratio down to increased about another 10 or 12 trillion dollars in available currency. So he has got plans to keep the debt under control. At the moment, they are working on it. What's going to happen? We're probably going to see 45 trillion within 3 years of debt and continue rising. But he's also investing in assets that are likely to move north also.
Okay. And do you think America can pull it off? Think of this whole debt.
Yeah,
they can.
Yeah, they're not going to default. They're not going to default. They have defaulted by the devaluing dollar. So anyone who's holding U.S. Treasuries needs to look at getting other assets and exchanging them over for other assets, because U.S. Treasuries and the dollar are devaluing. So you're getting less and less return, and they're not holding the value. Yes. Remember, U.S. Treasuries are good to hold under certain circumstances. For example, if the market was to fall, you can park your money in U.S. Treasuries. So they do have a part to play. It's not like they don't have a part to play. They have a part to play. However, what you should be looking at is putting your money into growth assets, gold, silver as a hedge, stocks and shares. Interest rates are going to come down. And what Trump's trying to do is trying to get the yield down on those bonds, that he can refinance them and save the U.S. Treasury hundreds of millions in interest payments. So if he can get the yields down, then he's in a much stronger position.
They're paying nearly $1 trillion this year in just interest payments.
That's correct. So they're paying $1 trillion in interest payments, and be aware that those interest payments are rising.
Yeah.
Now, the total income into the U.S. of revenue is about 2.8 trillion. So it's 30% going on interest payments. So Trump knows that, and he wants to get that down.
Yeah. He's trying his best, but if we see in previous rate cuts, whenever the rate cut happened, the yields went up. Also, like the yields went down before.
That's right.
Yields went down before the rate cut happened. That happened in the market. But the second yield, the interest rate cut came in, the yields went, up. And that is quite alarming, I feel.
Well, the reason for that is because bondholders don't trust the U.S. government, and they believe that there's going to be more and more bonds issued. Therefore, they don't have the appetite to buy them. Therefore, they're demanding a higher return in order to buy those bonds. Yeah. That's the reason behind it.
Yeah. Also, is that the reason why he had been pressuring Powell for quite a while to bring the interest rates down like anything, just so the yields are also going down?
He's been putting pressure on Jerome Powell, head of the Fed, to drop interest rates. But remember, the Fed was set up in 1910 in order to protect the dollar. That was their mandate. Yeah. Now their mandate is to monitor inflation and protect the dollar. So the only person protecting the dollar at the moment is Jerome Powell.
Yeah. And do you think he will bend?
He won't. I don't think he'll bend, but there's a lot of pressure on him. He won't bend per se and say that I've done it because of under pressure. He'll find some reason to do it, which will be, and rates will go down, economic slowdown. I've been saying rates are going to go down already for a while, and even the last few weeks when everyone said the chance of a rate cut in December is small, I said, what are you talking about? It's 100% they're going to drop rates. 100%.
I mean, 4 or 5 days ago, everyone was like, the chances have gone from 92 to 50%. And now all of a sudden...
25%.
Now it's 25%.
No, it dropped to 25%.
Seriously? Okay.
It dropped. Now it's gone back up.
Now it's gone back up.
It's gone back up to 70%.
Was it because of the New York Fed president saying there is still room to cut rates in near term?
Well, the presidents do have an influence on markets. But what happened was at the last meeting, Jerome Powell said they don't have enough data to make an assessment on a December interest rate cut. And because they haven't got enough data, then it says we can't make that decision. But they don't need the data. They just look at the economy and they see it's slowing down. Cut rates. And they need to cut rates not once, January, February, March, continue cutting rates to get the economy going. It will push up inflation. That's true. But the moment they need to get the economy going, then tackle inflation.
So talking about U.S. debt, you said they might be able to pay off and everything else. They might use stable coins. They might revalue gold. There are a lot of possibilities how they might go about it. There's also a chance of quantitative easing in next few months. My question is, that how this US debt and this whole scenario will affect the global financial system. Do you feel, are we going to get a very big hit in the global financial system, or is it going to stay like
Right.
this?
The basics of stock market movements is liquidity.
Yeah.
Liquidity is flow of money. There is money, you're fine. There isn't money, it's not fine. At the moment, there's money, and there's plenty of money around. And is there going to be quantitative easing? Absolutely, there's going to be quantitative easing. 100%. Has there been quantitative easing so far? Absolutely, but not announced. So they uploaded 48 billion back in July. Last 2 weeks ago, they did 29.4 billion into the banks. And they've actually stated, Jerome Powell stated, they're moving away from quantitative tightening, which is pulling money in. They're now going to be giving money out into quantitative easing. That's going to lead to an asset price inflation as far as stocks and shares are concerned, and devaluation of the dollar and rising gold and silver. So even though we're going into recession, we've been in recession for quite a while, official, unofficial, whichever people feel it.
Yeah. Would you say we are in a recession?
Well, there's a difference between official and unofficial. So unofficial is when the GDP is still positive. Therefore, when we say, oh, well, listen, GDP is positive, it's not a recession. But the man in the street is doing less business. You ask a man in the shop, how's business? Much quieter than last year. Well, that might not be reflective in GDP, but it's reflective in his ability to spend money. So that's a recession. So I think we are in a recession. It's not in the numbers. I think we're probably going to skate by the GDP numbers. So in other words, we get very close to official recession. And then by mid-2026, because of the flow of money, we're going to end up coming out.
Okay. We're going to have a proper liquidity-driven rallies as well in asset classes because of this huge injection. Is it going to be bigger than the 2007 rally?
No. And a 2008 injection or 2007 rally?
No, I'm not talking about the 2008 crash. I'm talking about the injection, like the way assets were going up before that.
Right. So
do you think it's going to... Yeah.
Probably we're going to have a massive asset boom. I would say depends on the liquidity, but I think, would it be the same as 2007? Probably not. Okay. So in other words, we're going to have one, but we're not going to go to all-time highs. But I don't think it's going to be that driven because of concerns regarding inflation.
The recession, the asset classes crashing like anything. Will we face that as well?
Asset classes crashing is, what do you mean by that?
Like
I know what you
crashing,
mean.
Like stock markets crash. Like, will we face a 2000 type of a situation?
No, I don't. I think there could be a correction of up to 20%.
Yeah.
And then markets will be buying the dip and then moving up. Then the US Treasury and the Fed will not allow the markets to crash. They'll just pump money into it, get refloated. Therefore, any dip of significance is an opportunity to buy. So I don't think there's going to be a stock market crash, even though everyone's talking about a stock market crash, crash. I think there'd be a floating down of prices and then pushing up. Is there a tech bubble with AI? Well, there's definitely overvaluations, but they've been pulled back a little bit. And Nvidia came out with great results, which is the market leader. And remember that Nvidia, all the circular providers to Nvidia have also done well. So I think any drop in those prices, AI is nothing compared to what's going to be in 2 years, 5 years time.
Yeah.
So AI is huge potential.
Yeah, perfect. But talking about these things, like, people also talk about inverted yield curve. It was an inversion, the yield curve, few months, like a year back almost.
Yeah.
There are a lot of other things as well, which people point out, like, because in technical analysis and technical ways, there is a possibility of recession, and it's,
Correct.
And people say the next recession, I personally also think so, that the next recession might be worse than 2008 because, we haven't faced a proper economic slowdown since 2008 because
Correct.
even after, even 2020 was not an economic slowdown.
Correct.
It was a bounce back.
Correct.
A very good one.
Correct.
So when do you think, will we face a recession like this? And if we will, when do you think so?
Okay, so I can't see a recession simply because there's two much liquidity, too much money floating around. There is slowing economic activity. There is rising unemployment and lower job openings. So on that basis, we're in a recession. But overall, of people of dramatic rising unemployment, I don't see that at the moment. As regards the yield curve, there's been an inverted yield curve for some time now, for over 3 years, with the 2-year yield higher than the 10-year yield. That's inverted. That is a sign of a recession, and it's been inverted for 3 years, but somehow we seem to be skirting around it, and we're not really heavily in it, even though there is rising unemployment.
Okay, perfect. Another question, that the inflation is pretty stable, like it's on the higher side according to Fed expectations. The unemployment is also high. Do you feel there might be a chance like this? This is just a speculation. I don't know. Like I don't have a prediction or an analysis on this. That if these rate cuts come in, there's a huge injection. Will we face something like a very high inflation in the future, or something like we experienced?
Yeah, we're probably going to face inflation of, on average, about 7 to 8% a year over the next 2 years. Okay, an average of 7 to 8%.
Average.
Yeah. Actually, I rephrase that. Rather than average, because that would mean inflation runs at 10%, 12, it's probably going to go up to 7 or 8% a year on inflation.
Yeah.
And that is going to obviously affect people on everyday life, but it's also going to affect stock prices and property prices and Bitcoin, etc.
Yeah.
So all of it's going to go up.
Okay, perfect. Jerome Powell has managed to bring inflation down without a full-blown recession so far. Unemployment is up, yield curve came out of an inversion. We talked about this. I personally believe the next recession, the question is almost repetition. But do you think Powell has any chance he can make a soft landing, or are we just delaying the pain?
Okay, so first, there's not been a soft landing. Inflation is not at 2.8% or 2.9% that they're claiming. Inflation is much higher. In other words, the cost of living, when you go to the shops, whether it's Sainsbury's, Tesco's, Walmart, wherever you go, the cost of a basket of food and the cost of you maintaining your house is much, much higher than 3% a year. I wish it was 3%, but when I go and buy a box of cornflakes, I don't look and say, oh, it's only gone up 3% in the last year. It's gone up 50% in the last year.
Yeah.
So don't tell me that inflation is 3%. They are lying to us. We all know they're trying to pull the wool over our eyes. We all know what inflation is, cost of living, and it's well into the teens.
Okay.
Well into the teens. So there's been no soft landing. You might want to fool us and say inflation is 3% or insurance has come down. All right. Look at the cost of flights, cost of travel insurance, amount of thefts, cost of car insurance, cost of food, cost of housing. It's all gone up.
Yeah.
And it's not gone up 3%. I wish it got up 3%. If you tell me it's gone up 3%, and instead of paying a bag of tissues, I'm paying £1, now I'm paying £1.03, say fair enough.
Yeah.
But if it's £1 last year for a box of Kleenex, and now it's £1.62.
It's pretty.
What?
Yeah, it's not 3% inflation.
No, and I went to buy a bar of chocolate and it said 75 pence.
Yeah.
I thought, I'm not paying 75 pence for a bar of chocolate, but last year it was 45 pence. That's not 3% increase.
Yeah.
So where's the 3%?
That is more than 3%.
There's no 3%. They're pulling the wool over your eyes. They're lying to you as they have for years. That's the way it works.
Do you think it will be a hard landing with also assets crashing down, or no?
No. I think we're in a hard landing in terms of economic activity.
Yeah.
I think there will be an overall slowdown till June next year.
Yeah.
And then coming out of it, we're going to have probably 2 years of significant economic growth.
Okay.
The reason for that is because of all the overseas investment that's coming into the US. It's going to eventually feed its way through to companies.
I had my next question as, when do you think the recession can hit? Now you're saying you don't see it in the...
We're already in a recession, but unofficial.
Yeah.
When you're saying when will an official recession hit, they'll do everything possible to give you the impression that there's no recession.
Yeah.
So there's a difference. Official, they'll pull the wool over your eyes. Unofficial is already there.
Yeah.
We are in a recession. We've been in there already for 2 years. It's unofficial. In other words, business activity has dropped, but it's not yet fed through or not feeding through to the numbers because they're using other numbers to hide them over.
Okay. Why does Fed do that? Or why do economic
Because they
data
don't want
come
to
like?
frighten the public. If they say to the public there's a recession, automatically consumer spending will drop because the public who watch CNN, Fox, BBC, ITV, we're in a recession. In a recession, they believe mainstream media cut back on their spending, and they won't spend money. They don't spend money. Companies will lower their will lay off people and start lowering their profit forecast.
Yeah, there are already like layoffs happening
Of course, there's loads of layoffs. Layoffs happening. It's very, very difficult to get a job these days.
Yeah. Oh, it is.
Very difficult.
Definitely it is. But what do you think if, I'm sorry, I don't want to insist on this question again and again, but this is most probably my last time asking, but what do you think will be if we face a proper breakdown? As you say, there's an unofficial
So we go
recession.
to complete economic recession.
But what would be the reason? What do you think would be the reason for this?
War would be one of the reasons for economic breakdown. Companies not making enough profits, laying off, rising unemployment would cause a major recession. So if they don't get hold of employment or unemployment, reducing unemployment, that would be a major recession. AI could cause a layoff of staff, but then there'll be other qualified projects where people have to be qualified in order to handle AI. Rising inflation, rising interest rates, and lack of liquidity. So those could cause a major breakdown, a major economic recession. I personally don't see that at the moment, but we could review it again in 6 months' time.
Okay, perfect. My next question was, is there a possibility that Fed would bring quantitative easing and rush the economy with the cheap dollar, as the U.S. dollar is already at a 14-year support level?
Right. So yes, it's going to be quantitative easing. Yes, it's going to be lowering of the dollar. I expect the dollar to fall between 18 and 20% over the next year and a half.
Okay.
So I expect the dollar to be on a downward cycle. So the DXY, which is the index for measuring the dollar against a basket of currencies, I see that heading south.
What are you bullish on US as well right now?
I'm bullish on US stocks. Right, not US dollar. I'm bullish on US stocks. I think they're going to significantly go higher. Any drop that's happened recently in the dips is an opportunity to buy in. So I think we're going to go on to a further bull run to all-time highs.
So you're pretty much bullish on for every asset class right now?
I'm not bullish on the dollar. Okay, I'm bullish on Bitcoin, gold, silver, and stocks.
Yeah.
I see a further rise.
Perfect. Anything else you would like to leave for the audience as a remark or as
far as the audience is concerned, then if they're looking for mentorship and get involved in more hands-on, then they can contact us at drivingmarkets.com. They can find me on Instagram. They can contact us if they have any questions, send me a question on Instagram. But we run all different types of groups. We've got stocks, we've got options, we've got FX, we've got crypto, we've got beginners, we've got swing traders, we've got gold and silver group, we've got private banking, we've got 8 groups. It's quite a lot.
Okay. Perfect.
So it does cater for everything.
Yeah. Just to tell the audience, it is not a promotional. There's no transaction between us. Just
Thank
to
you
give
very
a
much.
heads up to the...
No, there's no promotion. This is just me promoting our group.
Yes. And they have been they have a very good strike rate with gold and silver markets, especially, I feel.
Correct.
So, perfect. Thank you so much for being on the podcast.
Thank you very
much. And I hope to
It's a
see you
pleasure.
soon again on the podcast.
Thank you.
When gold is at $7,000 maybe?
8,000.
8,000. Or even 10.
Give me a call when it's 8,000.
Yeah, 100% I will. 100% I will. And we will have the same setup and the same place. Thank you so
very
much.
Thanks a lot.